Welcome to this February 2024 update on the best savings accounts here in the UK. I'll take you through the highest paying rates, plus give you a few elements of news here or there which are worth knowing about to help you make sure your savings is earning as much as they possibly can. The first thing to kick off with is a couple of headlines that will absolutely impact the rates we get this year. First of all, the latest inflation rate. This is currently at 4%. That was unexpectedly higher. It went up slightly on the month before. However, next week in the middle of February, we'll get the January figures, which are expected to be lower again. And the Bank of England, as I said last week in their latest meeting for the Monetary Policy Committee, they predicted that inflation probably could hit 2% by the summer, which is their target, although it may well then go up to around 2.95 by the end of this year. I've covered all of this in a separate video that looks at those things. So do watch that one if you want to find out more about it. But effectively, what that means is where we are now at 4%, where we're likely to be at 2%, even 2.95%, you can make sure your money that you are saved up somewhere will be earning more than inflation, which is really, really, really important. Of course, the flip side of this is as inflation does drop, it makes the case for reducing the base rate of interest even more likely to happen. And although, again, I covered that in that separate video from last week, we are potentially now looking at only 3 cuts to the base rate this year, starting in June. Previously, people were talking about it starting in sort of March or April. Maybe there being 5 cuts this year. Those cuts will obviously mean the rates start to come down, but they should still be able for you to get to beat inflation, which is really, really, really important. So they're the kind of big things that we'll be talking about as the months go on, exactly how that's going to impact our savings rates. And what I do want to quickly show you here in this update, I do this most months, didn't do it in January because I was doing a big outlook for the whole year, but this just kind of shows you, I know it's quite small print here, you can find the full article at becleverwithyourcash.com. This just shows you how rates are already pricing in these cuts, these expected base rate cuts are already being priced in to the vast majority of different savings accounts. And I've got here the best rates right now, the best rates a month ago, the best rates the month before that. And you can see the difference is how much they have fallen in 1 month and how much they've fallen in 2 months. And although not exclusively the case, they have dropped in most of those different account types. Where we've seen the smallest cuts, and I'll talk about this in a minute, is around the easy access accounts. But we have seen many more cuts on those fixes. And I'll show you this here, just quickly highlight a couple of those ones here. So a 1 year fix, 12-month fix, currently the best one 5.17%. A month ago, best was 5.5. 2 months ago, the best was 5.8. So it's 0.63 percentage point cut in the case space of 2 months. That is because they're expecting to see these big cuts happening in a year. It's even more when you look at 3-year fixes. The 2-month drop there is 0.75 percentage points, and 4 years and 5-year fixes, the 2-month drop of 0.5 percentage points. So big drops from where we were 2 months ago. And even then in December, they weren't the peak. They were already themselves drops down from the rates we were getting sort of October time. So again, this is basically what is happening across all those different kind of accounts right now. They are pricing in. They have already made a number of those cuts. But it doesn't mean we won't see more reductions in rates. Now, when I take you through those best different rates in a moment across different account types, what's worth sharing with you is that these can change even after recording this, potentially even while I'm recording it. So the best place to look for the most up-to-date rates is becleverwithyourcash.com/savings. That's our website where myself and the team every day, twice a day, we are looking at the tables. We're making sure the best rates that you can get out there are on there. So you'll be able to see if any more changes happen. What I will say is, it's been very quiet over the last week. The first month, January, was really crazy. Loads of cuts again in anticipation of those base rates coming this year. It has been a lot quieter the last sort of week or so. It's still happening. Rates are still falling, but more will probably come at some point in this year. Now, as I mentioned in that little table just now, the place where we haven't seen massive cuts have been in easy access accounts. The best ones, the top ones, have disappeared, but the ones below that still aren't too bad. What I would say is, though, in anticipation of that, we know some rates are going to fall later this year. Chip recently changed the terms and conditions of its instant access account, so it's now, rather than a set rate they can change at any time, it will track the base rate minus 0.51%. And that means the current rate of 4.84%, if the base rate drops by 0.25 percentage points, means it will fall to 4.49%. Kroo already does is that is the base rate tracking at 0.9 percentage points below the base rate. So again, we are going to see these cuts happen at some point. Some of them aren't even going to wait for a base rate cut to happen. We had Tandem announce just in the last week as well that the top-up bonus that is applied to most of their easy access accounts will drop on the 6th of March from 0.35% to 0.25%. This top-up basically means that the rate you're going to be getting is 4.9% rather than 5%. So again, already that cut's going to happen. And the likes of Virgin Money and Shawbrook, they've also announced some of those cuts will be happening in the near future. So again, this isn't a case of like, well, until the base rate happens, those easy access accounts are going to stay where they are. If you've already got an account, let alone looking for a new account, keep an eye on these things. Make sure that you don't accidentally just sort of swimming along lovely. You've got this rate. Actually, you haven't. It's dropped down. So do keep an eye. When you get those annoying emails or alerts saying that there's a statement or something you have to read within your app, do check that, because if it is saying that your rate is being cut, it might be reasonable you have to look around and shop around for a better rate. Again, you might move over to another account and that might also drop its rates. But again, this is something you're going to have to weigh up depending on how much you've got and how the size of that different cut. So here are the best easy access accounts right now. Again, more of them over at becleverwithyourcash.com/savings. So top of the pick is still that Santander Edge Saver paying 7%. However, that is only on up to £4,000, and you do need a Santander Edge current account to get this, which has a £3 fee. Although, as I've shared before, if you have the joint account, you can open up 2 of these, which gives you a better kind of effective rate. But even with that fee, and you have the 4K in it, it's still going to be head and shoulders above the rest. After that, you're kind of looking at just pure kind of easy access. The Kahoot, down the bottom here, the Kahoot Sunny Day Saver. This one pays 5.2%. This one is only up to £3,000 though. But again, if you don't have more than that, that's a good option because you don't need to have a current account or anything for that. Otherwise, you're looking at 5.1% from the likes of Leeds Building Society, Synergy, Close Brothers in terms of an easy one to open that doesn't require you to have anything. It's worth just giving you a nudge here as well about Skipton Building Society. If you have been a member with a mortgage or a savings account or something before the 11th of January 2024, they have got an easy access account paying 5.5%. So again, that could be a good deal for you. And again, Coventry Building Society down here, 5.15% on their limited access account, 3 withdrawals in a year. Again, that's not a bad paying one. Again, there are other options, but that's broadly the best bets for you now for your easy access cash. Just as I said, bear in mind, rates are likely to drop. Now, while we're talking about easy access accounts, I've got one bit of good news to share with you. I think it's a really sort of positive move. 2 banks have introduced pots. This is Tandem Bank and Kroo. Now, yes, I mentioned that their rates are going to drop or are likely to drop at some point this year, but they join the likes of Zopa, having a decent rate of savings across a number of different savings pots. And savings pots can be really, really, really handy if you have got different savings goals and you want to split out your savings into, this is from a holiday, this is from a house, this is from a wedding, whatever it might be. All those things, splitting it out and still earning a decent rate of savings. Yes, you can do that with the likes of Monzo and Starling and Revolut, but the rate will be lower. So it's good to see Kroo and Tandem introducing this, let's say, alongside Zopa as well. Now let's have a look at the best fixed rate savings accounts. Yes, rates have dropped a huge amount over 1 month, 2 months, 3 months and so on. But if you are in a position to lock your money away, then you can make sure you do get these rates. It's incredibly unlikely that we're going to see a base rate increase. Not impossible, but incredibly unlikely. And therefore, incredibly unlikely we're going to see these go up at all. There might be the odd provider who wants to go in with a kind of something at the top, just above the top, in order to get your business. But broadly speaking, you get these rates now before they disappear. And bear in mind, many of the rate cuts have already been anticipated and priced in. It doesn't mean these will stay around. These are the top ones. Below that, there are much, much larger drops down to some of the next ones. As you can see here, Alica Bank, 6 months, 5.17, 9 months, Atom Bank, 5.1, 12 months for My Community Bank, 5.17%. Those ones generally don't stick around for too long. 2 years with iFast Bank, 5.1%. Below that, they're all below 5% on 2 years. And then 3 years, Close Brothers, 4.6%. And 4 and 5 years, both 4.5% for IS Bank via Raise. And there's also a 7-year fix available from them as well. Again, worth having a look at these things if you can lock your money away. Something to bear in mind, though, I would say on the longer fixes, the 5 years, 7 years, whatever it might be, is still decent rates historically. But you might want to be thinking about if you don't need that money for that amount of time, potentially it might be better off in a stocks and shares ISA, where, fingers crossed, although never any guarantee, the market will hopefully beat savings rates. But again, this is kind of where we are with fixes. Again, lots of falling, lots of drops going on there. Now, another cut to tell you about when it comes to fixed rates. I'll be very brief on this one, but the NS&I Green Savings Bond is a 3-year fix. This already saw a cut from 5.7% back in November to 3.95% for new applicants to it. It was just being cut once again for newbies. It's now 2.95%. This is really, really poor for a 3-year fix. If you're not bothered about the ethical side of things, then you would not go for this. You'd go for that account 4.6% that I just mentioned just now. But even if you are concerned about the ethical side of things, there's the charity bank, which has got a rate of about 4.2% or something like that. There are other building societies, again, around that kind of margin, that kind of rate, which will mean your money is doing something good, or at least it's not doing bad, with a much, much, much bigger return than the green bonds. So again, I would not be considering green bonds right now. And while we're talking about NS&I, who do provide green bonds, they also obviously provide premium bonds. And I did do a separate video taking you through this back in, when was it? Whenever it was announced, really, a month ago, something like that. The prize rate has been dropped from 4.65% to 4%. So if you have any premium bonds, check out that video, which has more information. But okay, that new rate, that takes place from the March draw. So in about 3 weeks time. If you win something, the rate chances of winning hasn't been reduced, but the prize you might win likely be smaller. There's many, many more. There's £25 prizes at the expense of the kind of £50 and £100 prizes. Regular savers next. There are a couple of new ones to tell you about here, paying 6%. The rate is variable, so it could change. I'll come back to that in a second. But these are both Christmas regular savers, and it feels weird to be talking about Christmas in February. But the idea behind these is you put money aside now, so it's there and you're earning a decent rate of interest on it, and you can use it for your Christmas spending. So that's a really good thing to be looking at. Now, one of these, the one from Yorkshire Building Society, this one doesn't last for a whole year. You need the money for Christmas, right? So it will expire at the end of October. The most you can put in is 150 quid. I think this is a much, much better option, though, than things like park savings or the supermarket cards where you put your money aside each month. So that is not a bad option. Possibly better than this, though, again, 6%, but this is from Furness Building Society. This one will last for 12 months, so you can lock it in for the whole time, but you can get a single withdrawal. So you can take that money out whenever you want to pay for your Christmas things, but only that one withdrawal, so you've got to time it properly before Christmas. Otherwise, it will carry on until February. But this one lets you pay £500 in every single month. Now, while we're talking about regular savers, one thing I think might be worth thinking about this month is, if anticipation of these rate cuts to come, the fact that most regular savers are variable rate, which means even though there are some fantastic rates right now, it doesn't mean they'll stay there. They could, but the banks also have that option, and you imagine they probably will reduce them when these base rate cuts do come into play. But it are a couple which are fixed, and if you haven't already, this could be the time to lock in, because if you don't and you wait around and a rate cut comes, either from the bank themselves in anticipation of a future base rate cut, or when that happens eventually, then you'll have missed out because it will be issued at that lower rate. The big ones here are the Club Lloyds one. You need to have a Club Lloyds current account, but that is 6.25% for a year. And also Halifax 5.5%, and also I think it's Principality Building Society, also 5.5%. And those two don't require you to have any existing account with the bank or the building society in order to get them. And that rate is locked in regardless. Now, if you're not worried about that, I'll just quickly take you through the top paying regular savers right now. Still top of the table, better than any savings account out there, is the 8% regular saver from Nationwide. You need the current account to get that. First Direct at 7%, and that Club Lloyds that I mentioned just now. Also pretty decent, though, is his 7% one from Gatehouse Bank. This is expected profit rate because it is a Sharia account. But again, that one is at 7%. So you do not need to have an account with them in order to get that, which is pretty good. And those are Furness and Yorkshire Building Society Christmas ones I mentioned. And it's worth just a shout out that Skipton Building Society, if you've been a member with them since or before the 11th of January 2024, that is paying 7%. It was 7.5%. It's been reduced for new people. But again, that is not a bad one to consider if you are in the market for that. Finally, let's talk about ISAs. And there is a brand new ISA that I've seen a lot of you guys talking about over in our Facebook community. A number of you posted when this was announced and you were quite excited about it. This is from Chip. And Chip, if you've been watching these updates over the last few years, you'll know has often been right near the top of the saving table. So with them launching an ISA, obviously people were excited to see what it would do. Well, this is an easy access ISA. It hasn't got all the features yet, so transfers aren't there yet, although that is coming along. But disappointingly, the rate is just 4.75%. And you can beat that. There are a decent number of easy access ISAs which are paying more than that. So for the moment, I wouldn't bother with this Chip one, but it is one to keep an eye on, and you never know any more innovations. Often Chip will have kind of welcome offers and things that could be happening with ISA season happening in just a month's time. There could be some extra things going on there. If there are, I'll obviously let you know here on the channel and over on becleverwithyourcash.com/savings. Let's have a look at the best paying accounts right now for ISAs. Easy access, you've got Zopa paying 5.08%. A nudge above that, 5.09%, is Moneybox, but that is limited access, only 3 withdrawals a year. The best 1-year fix is from Virgin Money, but it does require a Virgin Money current account to get that. So I should say 5.25% there. And then we've got Zopa 4.7% on 2 years. So again, a big drop there. UBL and the 3-year, 4-year and 5-year fixes. The best Moneybox, best lifetime ISA is still Moneybox, 4.25%. Interestingly, if we do see any changes in the budget next month around lifetime ISAs, again, there's always pressure for this to happen in terms of getting rid of that potentially that withdrawal limit, so you can take the money out if you don't buy a house without getting that penalty, or the cap in terms of the property value. That will make this a much better proposition for people. I'll let you know, obviously, if anything does happen there. Thanks so much for watching. Remember, head to becleverwithyourcash.com/savings for more rates, any updates that happen on a daily basis, and check out these videos right here for more ways to get the most from your savings.